Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hey everyone, welcome back to India Fintech Diaries, the show where we discuss all things Indian fintech. We have a great show planned for you today, and as usual, I'm joined by my co-host Hemant. Hey Hemant.
Hey, Roy, I'm excited about today's episode as we take a look at another unique firm that's been making everyone's investing journey a lot simpler. Today, we have with us Vasanth Kamath, CEO and co founder of Smallcase. Welcome to India Fintech Diaries, Vasanth.
Hi, Hemant. Hi, Elroy. Thanks so much for having me here. Really excited to be part of this initiative.
Absolutely, Vasanth, great to have you on the show. To start off or to kick off, Vasanth, let's understand a bit about your background for the listeners.
Sure. So I'm from Bangalore. I was born there, but have grown up in Abu Dhabi. That's where I spent the first 15 years of my life. And post that, came back to India, did my 11th and 12th in Bangalore again, and went to IIT Kharagpur then to do my master's in economics. That's where I also met my two co-founders at Smallcase. One of them, Rohan, was my batchmate. He was doing his master's in computer science and engineering. My other co-founder, Anugrah, was a senior of mine. He also did his master's in economics. And after graduating, all three of us went our separate ways, had different journeys. Rohan joined Goldman Sachs on the New York desk. Anugrah was at Nomura in Bombay. And I joined this startup called Traction in Bangalore. I was the first employee there. And all of us spent 2 years at our respective, in our respective stints before getting together to start Small.
Understood. And Vasanth, I'm really excited about jumping into the business of Smallcase. But before we do that, we would like to understand a bit about the hypothesis behind Smallcase. We all know that investing in equities is one of the ways to ensure a healthy growth in capital. In fact, 14 million or 1.43 crore new equity investors were added in 2021 in India. Now, that's a huge growth from earlier, right? So it's becoming really popular. But there are many problems these investors face, right? Typically, like what stocks do I invest? How much do I allocate? What will be my exit methodology or strategy? So, talk us about the hypothesis behind creation of the Smallcase and what's the problem that you started with solving.
Sure. I think when we started, this was 2015-16. This kind of participation from individual investors into direct equity, into stocks, wasn't as much. I think there were a few angles from which we approached this. There was not, one problem as such that we really wanted to solve, but multiple reasons for why this kind of started making sense to us. For example, one was, I come from a family that's always been into the stock markets. In like my family members always invested in stocks. They never, used to invest in other equity instruments like mutual funds. And the even though they called it investing, it was essentially trading, right? Because they basically
Right.
used to take single stock bets, very concentrated, volatile for most times, and booking profits, losses was almost a weekly affair versus, looking at it from a long-term investing horizon. So I think that was one thing that we felt was missing. Stock markets or direct equity is considered by most people as something equivalent to speculation or betting or gambling. But there's obviously the whole angle around investing into good companies, staying put for a longer period of time, and actually seeing that result play out over that long term horizon. So, wanted to see if you could create a format for that. The other hypothesis that we had was there's this whole life cycle to an individual investor's journey in the equity market. This, most
Yep.
of them start out with equity through tax saving instruments like ELSS mutual funds. Then they start doing other mutual funds, and eventually they want more decision making, they want more control, which is why they come to stocks. But the gap between going from mutual funds to stocks is a very large one, right? Because with mutual funds, you're essentially investing into a product that is managed by a fund manager, while there's disclosures on what the portfolio consists of on a monthly or a quarterly basis. You're still abstracted away as an investor from those decisions. Whereas when you come to stocks, the entire onus comes upon you. You as an investor have to research, analyze, invest, create your
Right.
own portfolio. So that gap felt like a huge one. There were two extreme options. So we felt a middle ground or a gateway for people to get into stocks would be better. And that was a strong hypothesis to say that this life cycle will only continue accelerating. More people have come into the mutual fund, so that's a leading indicator of that more people will come into stocks. And as you just mentioned, that's actually playing out right now. I think the third angle from which we approached this was also that there was at that point a lot. Today it's obviously exploded, but there's been a lot of ecosystem infrastructure enablers built around mutual funds as a form factor. We didn't see the same set of infra being built around direct equity or ETFs or exchange traded products in general. So I think that was the third aspiration where we really wanted to kind of understand why or how we could build infrastructure or platforms around exchange traded products. So all of these three kind of came together very well as we thought about the idea of a small case and said that there could be an interesting format where people could take portfolio based approach to investing into direct equity versus continuing to build their own single stock portfolio. It helps out with people getting a better gateway to invest into stocks. At the same time, we figured that we could actually act as a bridge builder or act as the glue between different participants in the direct equity or the capital markets. So all three of them really came together. It was not just one reason or one hypothesis that we really chased.
Wasn't I've actually been a big fan of your product since its launch. I think I've been using Smallcase till since about 2017. And what's really stayed with me is how intuitive it is and how everything really works really well within Smallcase and the interface. But for our listeners who are not familiar with Smallcase, can you explain quickly what a Smallcase is and what Smallcase is and how it works?
Sure, Roy. Thank you so much for trying small cases out that early. I think we just launched in 2016. There have been many ways that we've tried to explain small cases in the most efficient manner. I think what's really stuck with most people is that small cases are essentially playlists of stocks or ETFs. Each small case is very simply put just a basket or an index of stocks. There's a list and there are weightages assigned by whoever creates this small case to that. This used to exist, by the way, as a format. It was not called small case. They were called model
Right.
portfolios, stock baskets, etc. But I think the biggest friction point there was that this used to come to people in an Excel sheet. As in, if you are
Right.
subscribing to a model portfolio from your broker or from a research provider, you would get an Excel sheet which would have, say, 15 to 20 stocks, the weightage is assigned to it, and then the onus is upon you to kind of invest into that, track that, manage that. So you would then have to see what the current prices are at that moment, calculate how much of each to buy basis the actual allocated weightages, place those orders individually on a stockbroking interface. To track that, brokers don't support multiple portfolio tracking, which is where you go to a portfolio tracking app or spreadsheet, enter all these trades
Correct.
separately, track that portfolio. Tomorrow there's a change in the portfolio, you want to invest more, again you repeat the whole process of placing those orders individually and entering those trades again. So was a very broken and cumbersome process. Used to involve at least three different interfaces that we'll have to kind of navigate through. So in addition to kind of standardizing or branding this concept as small case, I think the what the team has really succeeded in building is this whole experience around portfolio investing that now becomes seamless, that
Yeah.
now kind of becomes devoid of friction. And now kind of these are industry standard terms and experiences that we built from scratch. So I think that was also a very big factor to how we had to build small case to kind of ensure both its adoption as well as the kind of impact.
Interesting. Interesting, Vasan. So, what does an average small case look like? What's the number of stocks that you would see in average small case?
So when we started, kind of, it was important to seed the platform with use cases, which is where we had to set up
Right.
an in-house products team, a research team that used to create these small cases. Because as a concept, it was new. You couldn't really start inviting the community and ecosystem to participate in the creation process. But over the last three
Yeah.
years, what's also happened is we've basically democratized this process of manufacturing small case. So it's not just in-house products that are created, but also we enable, say, stockbroking research houses to create the small case. We enable independent advisors, fund managers, research providers to create their own small cases. We also allow the users themselves to basically create their own small case that they can share with their networks and groups. Right? So now the average small case, there's no such thing. But if you take the entire catalog of professionally built small cases, on an
Yeah.
average, there would be, I think, 12 to 15 stocks in a small case. Depends upon the strategy and the creator or the manager, how the weightages are allocated. But that's the average on the stock small cases side. I think on the ETF small cases side, which has been very interesting. Again, it's just been 3.5 years that we enabled ETFs to be constituents in small cases. There, on an average, you would see 3 to 4 ETFs, and the use cases for that span, different exposures that one can provide, including asset allocation.
Interesting, Vasan. Vasan, I recall when you launched in 2015, right? This product was, at least to me, it was truly revolutionary because pretty much no one thought of something like this was even possible in the Indian ecosystem. And if I recall correctly, when you first launched, it was with Zerodha, which was the only broker that you supported at that point. And I suspect that part of that reason was that Zerodha was at that point one of the few brokers actually offering APIs to build out on. So talk to us a little bit about the early days, some of the technical challenges you faced while trying to bring this product to market, and how you've been able to take some of the technology and also kind of spin it off into serving the broader market as well.
No, sure thing. So, like when we started out, a major motivation that we had to kind of solve for was to enable this as a end-to-end transaction platform as well, right? Where it's
Right.
not just the concept of ready-made baskets or portfolios that a user gets access to, but also the entire experience around how they can invest into it. They can track it in real time. They can invest more,
Right.
start an SIP. They can, update or rebalance the small case in a few clicks. They can exit it completely or partially. So that entire process required a couple of things to start with. One was either we could basically become a broking platform ourselves and kind of enable that, or we could partner very closely and deeply with the existing brokerage platforms out there and kind of build this experience on top of them. So while you're right in that the fact that Zerodha was the only broker at that point of time to actually think of this whole use case of having an API ecosystem built and opening that up so that other experiences, platforms, apps can be built on top of that. It also required brokers, and in this case specifically Zerodha, to be very comfortable with the fact that there will be a third party ecosystem being built on top of their core platform. Right? So I think those two things played very well. I think it was more than the capability that they had APIs. It was their intent to say that this is the way that innovation can be built in a much faster manner if you don't have to kind of rebuild the entire stack, reinvent the wheel over here by having to build the core broking system and all the processes that follow with it, but rather start building from where they've already done that job in a very robust manner. So I think
Yeah.
these two things happened very, very organically with the Zerodha team. I remember when we started working with them, Zerodha didn't have the kind of product arsenal that they have today, right? There was no Kite, there was no APIs, there was, Varsity, for example, the education initiative was just starting out. So
Right.
we kind of got a view of the entire journey from where they had just started building the business to now the behemoth that they are. So I think those two things played very well. And the reason why we decided to go with partnering with brokers versus building our own was that if we had to build small case as a instrument layer or as a product class, you couldn't restrict it to one broking platform. It had to be omnipresent. It had to be ubiquitous on multiple platforms, which is where that was the only approach to take. Otherwise, we would be building, yet another broking firm with this cool feature of having baskets as the primary offering. So
Yeah.
Zerodha fit very well into that. I think the next part of the journey was obviously as we got feedback from Zerodha users on what they would like to see in the product, building those features. The next critical point for us basically came to take it to multiple brokers, and that's where there's no precedent for this globally or in India. What we had to kind of figure out was two, three things over here. One, how does what's in it for the broker? Like, why would they want to integrate a platform like Smallcase versus build it in house. The second was how does the technical architecture around this work? Because again, this was not done before, so there was no playbook that we could take and directly apply over here. And the third one was around how the regulatory structure works around this, because again, there was no precedent to this. So I think those three things took us some time. Like after we launched in 2016 mid, and it took us 2 years to actually launch with the second broker. Once that happened, I think it happened in very quick succession. And again, this was 2016-17, where this whole concept of collaboration between fintechs and financial services wasn't a thing. And especially in our space, there was no earlier collaboration or initiative that had happened like this. So I think today there are obviously so many convergences happening between fintechs and financial services. I think in our space we were the first one to kind of
Correct.
kick this off. But so a bunch of those were the challenges to kind of one convince and get brokers to see why we want to build this ecosystem. This was not kind of a hack for customer acquisition and tomorrow we'll build our own brokerages. We couldn't obviously kind of commit to them this in writing because that wouldn't be right for from a business perspective. So it was a lot of conversations, a lot of pitches, a lot of storytelling, a lot of describing the ecosystem vision that we were going after. But it took us 2 years to get over all these hurdles. But I think that was the first big challenge to basically get this onto multiple platforms, and I think that's where it was worth the time. It took us like close to 3 years to go from one broker to the top 10 brokers in India. Well worth it right now. It seemed maybe a little too much from a bandwidth effort perspective at that point of time for the entire team because we were not sure this would even work. This was something that didn't have a proven business model or an approach earlier. So required a lot of kind of belief here to continue sticking to that, but well worth it now. As in, I think whole effort about laying down these pipes, building the plumbing, we weren't really sure whether it pay off, but yeah, today it looks like kind of it's an interesting bet, and we've been able to take this and actually build on top of it as well, like this transaction layer that we had to
Yeah.
build by working with all these brokers, by essentially building custom pipes here to open up these in many cases legacy systems. We've basically built an API layer on top of this. This is called the Smallcase gateway, so that any other app that wants to build on top of these multiple brokers can do it in a matter of weeks versus having to kind of go back to these brokers, perform these integrations all over again. What took us 4 to 6 quarters for each broker, now any app can build on top of this.
Vasant, today you support 14 plus brokers and have grown to over 5 million customers. Tell us about your growth journey and some of the key pivotal moments in that journey.
Sure. I think obviously pivotal moments. I think the first one was the launch itself. It was very tough to kind of build the first version of the product because unlike many consumer apps or products that you can build, here there's no concept of an MVP or just a version one here. Like you can't
Correct.
spin something up together and see how it works and keep evolving that. Financial services or especially investing is an area where you're actually asking people to trust the platform with their hard-earned
Right.
savings. So it's important that a lot of these security, robustness, all of that is sorted from day one. So that took us some time to actually build out. And even from just a concept perspective or an experience perspective, if we went to a set of potential users and asked them whether they would use something like this, it was unanimously yes. But given that this was a new behavior altogether, there was no sort of saying, oh, but if you do this feature, we might use it more, or this is something that we would really value because it was a completely new construct for everybody. So I think that was one of the most important moments where we launched and people kind of one loved the concept and product at the second time, and secondly also they kind of started recognizing what we've been hoping that they see on day one itself, which is that this is a new instrument versus just another platform to basically invest. So I think people started calling it small cases very immediately and started suggesting to us what we should be building next. So that was very heartening. I think the next pivotal moment was, like I mentioned, 2 years later when we launched with our second broker partner, because then it truly became an instrument or a product class versus just another feature from a broker. I think the third pivotal moment for us was kind of enabling independent advisors and fund managers to create their own small cases, so that today, like, there are
Yes.
450 plus professionally curated small cases, many interesting exposure strategies that you wouldn't find with other instruments. An important reason behind that was to enable the community to participate and create their own small cases versus just relying upon one team to kind of continue plugging the gap or building that entire catalog. So I think these have been the three most key moments to kind of being able to build what we are kind of building today and achieve that value creation in the ecosystem.
Got it, Vasant. And Vasant, last 2 years have not been easy on everyone, right? That pandemic has impacted or affected everyone, every business in a different way. So what's been the impact of the pandemic on your business?
I think it's definitely been a blessing in disguise for us. And there's one core reason to it, right? Because I think what it's really done for the entire ecosystem, not just in the wealth space or even in, say, the financial services space, but it's accelerated digital adoption in a way that we thought would take at least half a decade to kind of achieve. It's basically done that in a matter of weeks and months. And
Right.
Smallcase being a completely digital product and digital interface, I think that's helped us a lot, because if you look at, say, some of the data as to how users used to place trades on the exchange earlier through their brokers, a significant percentage of them used to still call and trade. And that was just, even though there was friction in that process, it was just inertia to move away from it. But I think these were some of the reasons, like, people couldn't operate from offices, which is where the whole concept of broker dealers or the call and trade concept went away for some time. As the first lockdown was there, people had to then adapt to kind of placing trades digitally. And I think they've never looked back. I think it's obviously a more efficient, more effective way to kind of transact on the exchange. But I think people needed that force shift in order to kind of understand what the benefits are. And I think that's basically helped the entire ecosystem, because now the whole service architecture is digital. The entire method of delivery of a product is digital. So that basically cuts down times, that cuts down kind of the entire process over there as well. So it just makes things a lot more efficient and effective for the entire industry. So I think that's been the biggest advantage of the lockdown. I think the other thing has also been, obviously, people have gotten a little more time to understand how they should be looking at personal finances. Like, in the last couple of years, if you see, personal finances was a topic that wasn't really discussed very openly. Forget like publicly, but even in groups, it never used to be discussed. It was something very personal indeed. But I think over the last 2 years, again, there's been an explosion of content around this. Been multiple discussion groups, forums, spaces where people are discussing how to benchmark their investing behaviors journey. So I think these two things have really helped the wealth space, because there's also been an increase in the number of products that people are offering. Like 2020, 2021 saw a lot of new mutual fund launches, saw a lot of new alternative instruments, obviously the whole growth in crypto assets, etc. So I think this is started to change how Indians look at investing. India has always been known as a nation of savers, but now in the last couple of years, it started becoming a nation of investors.
Got it, Vasant. And once, Vasant, a connected question. I'm very curious about the customer profile and their behavior, and how have you seen it changing? Some of it you touched upon when you spoke about pandemic. But if you can give a view into what the typical customer profile was, what the consumer behavior, and how have you seen it change over a period of time?
Related to small case, I think it's been a function of two things. The kind of features that have been available, and this is again dictated a lot by what the users want. And second,
Right.
the kind of platforms that small case has been available on. Like, for instance, like I mentioned, when we launched with Zero, it was primarily a trading platform. Maybe 70-80% of the users were traders at that point of time. They looked at small cases as a way to kind of take positions on sectors, themes that they don't have as, say, ETFs, or it's too cumbersome to kind of do it across multiple stocks. So while that was not the most prevalent use case, but that was definitely a major use case where, say, for example, there's a regulation around pharma coming. There There was no pharma ETF at that point. So they would basically buy a pharma small case, sell it, buy it again during the day to play, intraday movements or shifts within that. I think what we recognized also was that maybe that's not the way that small cases should be perceived or invested in. So building features like an SIP, building features like, say, helping people to understand how their ideal portfolio allocation should look like over the long term. Building features like, say, giving more information or ratios or numbers about a small case, all of them started converging towards a point where the next set of integrations that we did, the kind of users that we attracted, the it was all towards a long term investing, and that's a big change. As in today, like now we start looking at how the inflows per user is growing, and that's determines whether they're finding value in the product or not, versus whether kind of they're transacting more actively, there are more orders placed per user. The idea is whether they're allocating more and more to the small cases. So I think that's been a significant shift in how small cases were perceived, from a primarily trading use case to now a buy and hold long term investment.
Got it. Got it. And now to the $1 million question, or should I say $1 billion? I think this quote needs a change. Now, million is too small, right? But to the $1 billion question, that in this era of zero commission brokerage, how does someone like a small case makes money, and what's the revenue model or the philosophy behind it?
Sure. So there was primarily one way that we used to monetize as a business. That was through our broker partners itself. We were providing a platform to them for portfolio transactions, and there was a consideration or a commercial arrangement for that. Like I mentioned, over the last 3 years, there's been more and more manufacturers or creators that have come onto the platform and started building their own small cases, scaling their research and advisory practice through the platform. That's another primary way of kind of how we also monetize, where we charge them a fee for using the platform, because it gives them all the tools, functionalities, and modules to start, run, and grow their portfolio practice. So these are the two primary ways. There are other ways through which we also monetize, but bulk of our revenues come through these two methods. I think there's been two principles on which we've built this. One is that we will always keep a uniform pricing for all our partners and participants in the small case ecosystem. On the broking side, on the manufacturing side, for small case managers, because if you are truly building an infrastructure or a platform business, you can't have differential pricing. There has to be a strong philosophy of saying that everybody gets the same set of features, everybody gets the set of offering that you're offering, and so for that there's the same pricing. Even though there's been multiple requests, inputs on saying we do it slightly differently compared to someone else, which is why there should be a different pricing. But I think we've kept a uniform rate card across all our partners. I think that's one principle. The second one was that in this space, there were no platform plays, not many platform plays. Obviously, you have the exchanges, you have the RTAs, etc. But then platform plays were a rarity. It was mostly service providers and vendors that used to be here, and the way that they charged many of the participants was, for a certain project. If they want to build a new feature, they charge separately for that. They charge separately for support, maintenance, a one-time setup, integration fee. That keeps happening over the life cycle of a certain agreement or a partnership. In our case, again, the principle that we took was very clear. When the partner makes money, we make money. So it's always been aligned. There's no minimum fee to minimum AUM to come onto the platform to set up their business on small case, etc. The idea has always been to say, we'll take a percentage when you monetize. Otherwise, if you're making nothing, we make.
That's pretty interesting, Vasanth. Vasanth, in the US, there was a similar concept executed by a company called Motive. I think they started in 2010, and they were one of the pioneers in bringing the concept of thematic investments to the masses. Now, in a period of about 10 years, by March 2020, they had about 868 million in assets under management and over 300,000 customers. But then abruptly, 1 month later, in April 2020, they shut down. And now people have been analyzing this for quite some time, and there's several reasons that have been put forth. But one of them seems to be that there was increasingly leaner and more nimble competition that they faced, and that kind of let them kind of fall from the numero uno position. Now, competition in the Indian space also has been kind of increasing over the last couple of years. How do you see the competitive landscape for this tech-enabled investing evolve in India? And what's on the horizon for the next couple of years for Smallcase?
No, sure. I think maybe I'll speak a little bit about Motive as well.
Yeah,
Approach that Motive took and what we have taken in India are very different, right? Because like I mentioned, they are a broker first.
because they were a concentrated single broker kind of business, and they were also their own broker, if I recall
Correct.
correctly.
That's what they are a brokerage business, and their primary offering was motifs or these thematic baskets that they used to offer. I think a couple of things happened. One was if you're building a concept, it can't be restrictive to one platform, which is what they were trying to basically popularize. The second is at the same time, their competition really came from the ETF industry. Because if you look at how assets in ETFs in the US has grown, it used
Yeah,
to be maybe I think around 10 to 15% in 2010. 2020, I think 2019, it crossed 50%. So ETFs have been a big reason for why, say, thematic investing has become more mainstream. Like people could participate in any theme through an ETF form factor. At the
yeah,
same time, kind of Motive started competing with all the other brokers there versus kind of what we have done, which is collaborate with them. So I
correct.
think both these reasons kind of contributed to that. And I don't think it was abrupt. I think there were a lot of signals and indications along the way. They started focusing more on becoming an institutional business, a B2B business versus a direct to consumer. They started manufacturing indices for some of the largest banks, asset managers there. They started providing data to many of these asset managers to say which are the interesting indices or motifs that were being transacted on the platform. They started providing the service to advisors who could then create motifs to for their own captive base, for every advisor's captive base. So it was kind of anticipated that either they completely become a B2B business, provide this technology layer like we have, or they basically kind of spin off and kind of, which is what they did. They
Yeah,
gave the technology to a broker like Schwab, and they
correct.
gave the kind of gave the use sold the users to another portfolio investing platform called Folio Invest. In
That's right.
India, I think from a competition perspective, for what we are doing, it's not trivial, right? Because it's not just about building this concept or building this brand. There are multiple network effects that are playing out. One is, building this asset of infrastructure across all these brokers, having this transaction layer is very, very valuable, very tough to replicate. I think the second one is around the whole ecosystem or the community that's building on top of this, where we have close to 50 gateway partners now who use the gateway to kind of offer stocks and ETFs trading on their own apps. We have close to 200 investment managers and advisors who are creating these small cases, and that it's a very strong network effect that's playing out. However, there's definitely an explosion in the number of brokers, distributors, platforms that are offering investment products, and it makes sense, right? Because like the last 2 years has accelerated this trend or phenomenon of people wanting to kind of come online and directly access these products versus go through an intermediary. So there's a large opportunity here, and there are multiple players trying to basically be the top three, top five platforms to offer these products to the end client. So I think that will continue, and it's not just coming from these entities that have been set up for financial distribution, but also from other digital ecosystems as well. Like for example, you see payment apps like Amazon Pay, Google Pay getting into wealth distribution space. They're offering products like
Correct.
FTs, digital gold. Amazon Pay started doing mutual funds. You see payment apps like say Paytm, Phone Pay now becoming brokers to offer stocks and ETFs to their end clients. You see ecosystems like, for example, WhatsApp, Flipkart actually start offering insurance, wealth products as well. So I think that will only continue growing. There's a strong use case for businesses to offer investment products. It helps with engagement, it helps with monetization for them, and that whole idea of contextualizing when you are contextually serving investment product to the user during a process that they're doing makes a lot of sense. Embedded finance is definitely growing. I think we fit in very well there, where kind of we are building both the infrastructure transaction layer as well as the product layer, and we work with a whole roster of distribution platforms, including many of the use cases we spoke about. So I think on the distribution layer, there's a lot of innovation. There's a lot of new use cases coming up. I think what we are trying to really solve for is on the product layer itself, where we believe that there are many more form factors, formats, exposures that are yet to be built out, and that's something that we can enable as a platform.
Got it. Awesome. Vasanth, it has been great conversing with you today. If our listeners want to know more about Smallcase or get in touch with you, what's the best way to do that?
We are obviously, you can go to smallcase.com. We are available on both the app stores, Android and Apple, to download the Smallcase app, try out the Smallcase experience. You would need a trading and demat account with one of our broker partners to do this, but you can get started and try out the experience. To share feedback, we are available on all social platforms as well. Twitter is something that a lot of our users really use to engage with us. So both the Smallcase handle as well as I am available on Twitter. Smallcase is at Smallcase HQ. I'm at Vasanth.
Excellent, excellent, Vasant. We'll include those details in the show notes. Thanks a ton, Vasant, for taking the time to speak with us today.
No, absolutely, Elroy, Hemant. Really glad to be part of this. Wish you all the best.
So that's it for India FinTech Diaries for this week. Do log on to our website indiafintechdiaries.com for exclusive content. Until next time, stay safe.